My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Welcome back, folks. Today our special guest does more than just real estate. He's a very accomplished entrepreneur, business owner. He's big in franchises, and he's figured out a really good way to kind of balance things out. He's got real estate, especially in the commercial space, and he's got businesses, and he works with people in both those worlds. So our guest today is Justin Sloan, zooming in from beautiful Ohio, but he spends a ton of time in Texas with his restaurant work as well. So Justin, welcome to the show.
Hey Dave, thanks for having me.
So that was a mouthful. That's a lot of stuff you're up to, my friend. So let's just zoom out for a second. Give us a little snapshot of what the real estate portfolio looks like as of right now, mid-2025. What kind of properties, how many of them, kind of the markets you focus on. And then let's take a look at the business side as well, okay?
Yeah, absolutely. So in real estate, I'm a commercial real estate guy right now. I was brought up in single family and small apartment buildings, but ultimately I love the triple net and the world of retail. And then mixing that with businesses like you talked about. So we have a lot of strip malls, absolute triple net, restaurants, Perkins, Dollar Generals, things along the lines of that. And then a lot of strip malls, like I said.
Okay, so that's the real estate side of things. And then on the business side of things and the franchise side of things, what does that look like?
Yeah, so we actually just a few weeks ago opened our 11th restaurant.
Congratulations.
Yeah, thank you. So I found a concept called Everbowl a few years ago, which is bowls of things that have been around forever. I like to call it Chipotle, but fruit. And it's kind of a conveyor belt style line where you can go through and create fresh ingredients and kind of make smoothie type of bowls, acai bowls and superfood bowls.
Right. Yeah,
and,
I love those.
It's been growing all over. When I found them, they had 22 or 23 locations, and actually a few weeks ago just opened up their 100th location in Lincoln, Nebraska.
Okay, so this is an existing franchise operation, and you've joined forces and you've become a franchisee or maybe a master franchisee because you got 11 of these suckers. So
yeah,
that's you're working it within an existing business.
You got it. Yeah. So I'm actually their largest franchisee. I'm also the area representative for the state of Iowa and Texas. So I own the rights to both of those states. And ultimately, a few years ago, I kind of saw the writing on the wall that not only is it cool to own real estate, but what if you could also own pieces of the businesses inside of the real estate? And we're seeing that happen with BlackRock buying, Jersey Mike's and then all of a sudden buying Tropical Smoothie. And just this week, Rourke Capital bought Dave's Hot Chicken for $1 billion. Wow. And what's happening is a lot of these big companies love residual, repeatable income. And so my history, right out of high school, I built a chain of cell phone stores and, did it kind of smaller, working in there all myself until I could hire the first employee and the next. But as I built my portfolio and kind of was able to take a different type of stab at this one, ultimately put together a syndicate where we not only sometimes own buildings or invest in companies, but in this case, we also own a lot of restaurants together.
So at this point, do you have any of your restaurants in your own properties?
Not right now. We're working on it, but the most important thing is having the best locations for the restaurants. Yeah. And, while I have many strip malls that are amazing locations, there's also no vacancies in them. And I'm not going to kick out someone just to put in one of mine, Yeah. So it's more important to us just to find the right stuff. But at some point, we're definitely in talks with different developers and other restaurateurs or repeatable business model people where why wouldn't we put up a building and already have it stacked with 3 or 4 of our own concepts? You could have the building 50-60% leased before you even, dig on the dirt and allow the people inside of it to have a vested interest where they're paying rent, but they're also owning part of that property where they're paying rent too. So I think that I love a world where people can be part of things that they can see and touch. I think it's really cool to drive down the street and be like, oh, I own 1% of that or 0.5% of that or 3% of that. And it makes you feel part of the world.
Yeah.
And so that's what we do here at Sloan Capital is we try and create opportunities to allow people to buy things that you can physically see and touch and go visit and order food from or see that strip mall or whatever it is and then provide a lot of transparency to our investors of this vision and journey that we're on and that they're part of.
So are you raising capital both for real estate opportunities as well as the business slash franchise opportunities? Are you raising for
Right
both?
now, we're just focusing on restaurants. We actually just opened up our latest fund that will be kind of our last restaurant fund, probably for the next couple of years, and we'll go execute that business model. I've kind of been sitting back and waiting a little bit with real estate.
Hmm.
Honestly, I sold a lot of my real estate 3, 4 years ago to people that wanted to buy it at five caps.
Yeah.
And when their interest rates are up here in a year and on their ARM loans, it'll be really interesting to see what happens.
Mm.
So with the restaurants, we are debt free. Like you said, we raise capital. And so we can go into these restaurants and have a very repeatable business model where we know about what the sales will be, what the fixed costs will be, what our margin is. We know the menu, we know our cost of goods, we know all those line items. So then it's just about finding the right piece of real estate, getting it built out, launching it properly. And, our newest one that just launched back in, late April was profitable within the first month of May because there's no debt on it, and it's a different business model that gives us quite a few advantages.
Okay, well, that's interesting. If you don't mind, I'd love to unpack that a little bit. So you're going in all cash to open up these franchises,
You got it.
these new restaurants that you're starting up. So how are you typically paying your investors? Is it like a revenue type share thing, or is it more of a fixed rate? So they're
So
instead of the bank kind of thing. How does
Yeah,
that
we're
typically
doing
work?
pure equity. So if people invest, you actually own a percent, whether it's a 0.5% or 1 or 5% of a batch of restaurants. So what we do is we do
Mm.
small groups of restaurants to give people some diversification.
Yeah.
And then when they invest, they're actually an equity owner. So whenever we distribute capital in any way, shape, or form, they get their percentage of it. They even see their P&Ls every quarter and get full breakdowns. They get their portions of depreciation, and they're our partners right alongside. And when we get paid, they get paid. And that's I'm part of a lot of other deals, and I wanted to make this one where people got to see that excitement and they start receiving distributions as soon as each restaurant is profitable. And so as we open them and scale them, our investors get all excited and they come to the grand opening sometimes, and they're liking the posts and tweeting and helping support us in whatever way that they can. And it's really fun to allow people all over the country to be part of what we're doing.
So you're focusing on this one kind of restaurant, right? That's 100%
Right
your
now,
focus right now. Yeah. So you
that's
got,
correct.
yeah. So you
Yeah, I
really get
definitely
that
have
down.
other brands right now that are starting to reach out saying, hey, scale me in Texas too. Once you become known for, proving out that you can duplicate things at a high quality, we're pretty attractive to other brands that want to expand. But I am a serial entrepreneur. I'm guilty of shiny light syndrome like the rest of us. But, when I take capital, it's really important for me that we go execute that business plan, make sure that wins for those investors. And then once we get a little further down the road, I think it definitely makes sense for us to be looking at other opportunities, other, brands, other types of food, other types of services, whatever it might be. There's thousands and thousands of franchises and repeatable businesses. And with our skill set and being able to find the right people, know how to negotiate real estate, know how to structure things, have a great syndicate behind us that funds that. Um, yeah, there will definitely be a time where we add other brands, I'm sure.
So obviously you're very keen on the whole restaurant franchise thing. It's not all sunshine and flowers, I'm sure. What are some of the not so great sides of things about this business model for you?
Yeah, I mean, I think the reality is when we're at 100 locations nationwide, I think over 26 states. But if you think about that, that's a really tiny drop in the bucket. So,
Yeah.
I can pretty much guarantee if I even go out in public in a city where we have a store, the vast majority of people still don't know who we are. You don't realize how long it takes to become Chipotle or,
Yeah.
Starbucks or whatever it is with thousands and thousands of locations. So I think the one of the biggest learning things is while Everbowl might be my whole world and I know everything about it and I pay attention, when we launch stores in new cities, nobody there has any idea who we are. And that to me is like the biggest pain, but also like the biggest upside. Because if we can crack the code of brand recognition and loyalty and growing customer bases, well, we only have upside from here because we're already where we're at and we're debt free. And, every sale that, every bowl that we sell more on top of what we're doing right now continues to be higher and higher profit margin, which therefore lead to more and more distributions and returns for our investors.
So at the moment, are you a master franchisee? Well, you are for Ohio,
Area
correct?
representative
Area
is
rep.
what
All
they
right.
do. But yeah, there's a million different terms in there.
Yeah. So I guess one of the advantages is while it's small, your input has a much bigger resonance with the main owners, right? So I mean, you're kind of all in this together, trying to crack the code on what marketing works best, and so
Absolutely.
I
Yeah.
imagine
And
they
watching the
listen.
company grow from 25 locations now to 100 means
Yeah.
their resources grow and we all learn these things and our teams have to integrate, really well together as we run new promotions or try new menu items. And
Mhm.
so a lot of times, their company's based out of San Diego and they have a lot of stores around there, but we'll want to test it in other markets and other climates. And it's important that, they have partners that they can trust to test things out and get feedback. And in turn, I have a partner that is helping create new things. And, they just hired a huge PR and marketing firm and, going to the next level when it comes to all that kind of things. And yeah, and then along, celebrity partnerships, Drew Brees came in, Jason Tatum just opened a store in Boston, and just, really exciting partnerships that have also taken the brand to the next level.
So where do you see things going over the next 12 months or so for you, Justin?
I think my focus is just keep doing what I'm doing, but just keep getting better at it. And with that, we're like I said, we just launched our newest fund, so we're worrying about that right now. Get that filled, and then over this course of this winter, we're going to go execute that game plan. And with that, continue to build our brand dollars, our brand spend, our marketing, and build that loyalty that we're talking about. That just keeps on incrementally growing while our expenses stay relatively fixed. So we're looking for that next level of upside because the next level of upside is a lot of upside.
So when you've got a lot of experience raising capital for real estate deals, what are the differences? What are the challenges when you're trying to bring people on board for these restaurant deals?
Yeah, so the way that I structured it was kind of similar to a multifamily project. Like imagine that you're going to go build a new multifamily. Well, by the time that you find the land and get the permits and do like there's a ramp up period, but then obviously then there's even more of a ramp up period as they lease it and all this kind of stuff. So I think it's similar when we find a piece of real estate and we build it out and we get our health permit and occupancy permit and then we open up and we scale the restaurant. And so a lot of my investors are also real estate investors, or they've invested with me in other real estate, and because of the success that they had, they said, "Well, yeah, well, why wouldn't we try this with him too?" But to me, it's all about just repeatability. And in real estate, there can be lots of ups and downs and lots of longer term game plans. Where with us, it's really open and hit the gas and try and get as many customers in there. And if we're not, make sure we spend marketing in the right places to turn those engines on. And with real estate, a lot of times the real estate deals that I personally do they're not really buy and hold type of deals. Sometimes, and over the course of many years, if I can find a great property that I, wouldn't mind holding for 8 or 10 years, that's great. But most of the strip malls that I'm buying are usually under rented, and we're going in there with a game plan. Everybody around them is $24 a square foot. The strip mall's at $16 a square foot. Let's go in there and remodel it, make some changes, help the tenants a little bit, all these kind of things. And before you know it, you've increased the value of the property exponentially because you've increased the rents. The restaurants are a little bit different because obviously it's all about sales and then growing that, continuing to get that upside, and paying along the way.
Very good. Well, that's exciting stuff, Justin. I'm sure there's going to be some folks interested in connecting with you. What's the best way for them to do that?
Yeah, I'm on LinkedIn most of the time. So Sloan Capital on LinkedIn or Justin Sloan, please reach out.
Awesome. Justin, thanks very much for being on the show.
You bet. Thank you.
All right, everybody, take care. We'll see you on the next one. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.